Thank you for being here. If you're new here, hi, I am Randi. I'm the founder of I Need a Clone Consulting, and we are a bookkeeping and financial consulting firm that works with small businesses, creatives, and conscious entrepreneurs. And what we do at Clone Consulting is help business owners understand what their numbers are actually telling them, and not just at tax time, but throughout the year, so that you can make grounded, informed decisions instead of reacting in panic every time tax season comes around. So every single month, my team and I share a lot of free financial education and inspiration on both Instagram and Facebook. But the reality is that social media content has a very short shelf life. And if you don't catch it within about 24 hours, the algorithm buries it and it's basically gone unless you are actively going to our page to find it. So starting this year, I'm creating a new project, and this entire YouTube channel is part of it. And so what I've decided to do is share a little bit of empowering information with you, and also strategy information and financial information with you once a week via the Manifesting Strategist blog and YouTube channel. And at the end of the month, what I'm going to do is go back and pull together the most important finance topics that we shared throughout the month and bring them here into one longer YouTube video where I can slow down and explain things properly and connect the dots in a way that short social posts just can't. So this is the very first Money Matters Business Finance 101 class, and that may evolve as a name, but the intention is really simple here. I'm going to give you practical financial education that you can actually use in your business. And if you want to follow us more regularly, you can find us on Instagram at Clone Consulting, and on Facebook at I Need a Clone Consulting. So like I said, I also offer a weekly newsletter where I share the Manifesting Strategist blog of the week. So instead of having to go to our website, the blog just comes straight to your inbox. And this blog blends metaphysical insight with very practical strategy to help conscious entrepreneurs align their vision with their business structure. So I will link that in the description here as well. So before we get into today's content, I want to kind of talk quickly about some things that, like, oracle cards and things that I've pulled over the last month. The first one was this card, Winter. And this one was all about slowing down and taking the time to reflect on what last year presented you with, and how can you take what you've learned from the past year in this time of slowing down and the time of the dark season of the year, and apply it to move forward. And then the next card I pulled at the next video that I did was the Blossom card. And so I want us to also be thinking about the seeds that we've planted over the last year. Are there any ways that we can improve upon that seed's health? Can we nurture those seeds? Is there any extra, like, plant food that we can give those seeds to help us really blossom this year? And then the third card I pulled this month is Achieving Success is My Natural Birthright. And this is a card from the Money and Law of Attraction deck by Esther and Jerry Hicks, or it's the Teachings of Abraham Hicks. And so this is just a reminder and an affirmation that you were always meant to succeed, and life is supposed to go well for you. And when it doesn't, it's not that we should be looking at the external circumstances, but what is happening on the inside. As within, so without. Your external circumstances are a direct reflection of what is happening on the inside. So those are the three cards that we pulled. And then today, at the very end of this class, I'm going to pull you a Business by Design card. And this is a deck by one of my business coaches, James Webmore. I'm in his program called Business by Design. And these are fun little affirmations, if you will, about your business. So hopefully you'll be able to take what I share today for the Money Matters class and apply it to your business with a little bit of inspiration from good old James Wedmore. Okay, so without further ado, I'm going to get into our first Money Matters Business Finance 101 class. So before we get into today's content, I want to give you all a quick but important disclaimer. This video is for educational and informational purposes only. It is not tax advice or legal advice, and I am not your financial advisor. So always consult your own tax professional regarding your specific situation. So today we're going to talk about preparing for tax season and key deadlines that come with it, bookkeeping foundations and that most business owners skip, entity structure considerations, and forecasting and CFO level thinking, and how to actually use your financial reports day to day. I can't tell you how many times I hear business owners say, yeah, my books are up to date, but like, I just need them for taxes. And that's not true. Your books can actually help you make really good decisions for your business that's going to increase your bottom line. So this is foundational work, but it's the kind of foundation that makes everything else easier. So let's talk about preparing early for tax season. This year, preparing early for tax season is especially important. Recent changes may impact federal taxes, credits, and deductions with the new law that was passed in July of 2025. And the IRS has been very clear that they want taxpayers to prepare earlier rather than later. So there are a few simple steps you can take right now to stay ahead. First, log into or create your IRS online account. So this allows you to view your tax records and make payments and access notices and manage your information securely. It also helps prevent surprises because you're not relying on paper notices that show up months later. So, second, start gathering and organizing your tax records early. So don't wait until April 14th. So this includes not just business income, but things like side work, gig income, digital assets, unemployment, refund interest. And then on your the personal side of things, like any of your like investment or capital gains, or if you get your insurance through the marketplace, like you're going to get a 1095, pull together the 1099s and the W-2s that you're going to get. If you had at least 200 transactions and over $20,000 of transactions in 2025 run through a payment processor, you're going to get a 1099K. And then if you get a W-2 from an employer, then you need to be watching for that as well. So getting organized early reduces filing delays. It lowers the chance of errors, and it significantly reduces stress. And let me just say that if you have all of your stuff organized and clean and in order and easily readable, then it's going to save your CPA time, which saves you money. So, getting organized, it's one of those things that may feel small now, but it makes a huge difference later. So just start gathering those as you see them come in. Okay, next up, let's talk about the 2026 season and the IRS's warning. So they really are urging taxpayers to begin preparing now for the 2026 tax season, which covers your 2025 earnings period, if that's not clear. And this is largely due to the new legislation that I mentioned, including the One Big Beautiful Bill Act. Hey, I didn't name it, but that's what it's called. And I actually heard somebody on a podcast the other day call it the which I find hilarious. So I'm going to call it the because I think it's funny. So this bill introduced wide-ranging changes, and you might consider going and reading about those. If you like things like if you have a baby between 2025 and 2028, you're going to get a free $1,000. And so you want to look into that and learn which form, I think it's the 4547, which form you need to fill out to get that account. It's an investment account. So yeah, there's lots of changes, but starting early will give you time to understand how the new deductions or limits apply to you, to gather those key documents and receipts, to adjust estimated tax payments if your income changed, which is very typical for self-employed people. So if you're paying quarterly self-employment taxes, based on last year's number or 2024's numbers, but 2025 was drastically different, you might want to adjust that last payment, which was due on January 15th. So there's still time. And make sure to talk with your trusted tax professional before your deadlines hit, if possible. So this really isn't about causing fear and panic and stressing you out or overwhelming you in an already like busy season, but it's about trying to create more breathing room for you and clarity and options instead of scrambling at the last minute. Okay. So quick timing note on your 1099 and W-2 deadlines. So this slide originally came from social media, and by the time this video is published, the January 31st deadline for W-2s and 1099s will have already passed because I'm actually recording it on January 31st. So if you're watching this and you have missed the deadline, that does not mean you should ignore it. You can still limit the IRS penalties by filing right now. So for tax year 2025, the penalty rates, they're steep on those 1099s. 1 to 30 days late is $60 per form. 31 days late through August 1st is $130 per form. After August 1st or not filed is $340 per form. And if the IRS deems that you have intentionally disregarded filing your 1099s, it's $680 minimum per form. And the IRS is not known for letting things slide, and they often don't notify you about missed filings until much later, sometimes a year later, which is why this sneaks up on people. So if you missed the deadline, don't ignore it. Go ahead and file now. And if you're unsure what applies to your business or if you need help staying on track, this is exactly the type of thing that we support our clients with. Okay. So one last important note about 1099s. You may have heard with the new that the $600 threshold has been changed to $2,000, but I want you to know that the $600 threshold still applies for the 2025 tax year, which is what we are working on now in January of 2026. So forms issued in January 2026 report the payments made during 2025. I just want to make sure you understand that. So the higher threshold of $2,000 does not apply retroactively. So some business owners are assuming that this new threshold applies immediately, but it only applies to payments made on or after January 1st, 2026. So your 1099s should be for contractors that made $600 or more in 2025. So using the wrong threshold for 2025 can lead to missed filings and penalties. And just so you know, we had all of our clients 1099s filed by January 24th. So if this is stressing you out, like let us know and we can get them filed for you. That's what year-round bookkeeping support looks like. It's organized, we're compliant, we're calm. And yeah, if you want help making sure your books are truly tax ready, then you can book a call. And just so you know, we also offer a new monthly special every single month, which you can find at ineedaclone.com/monthly-special. I will link that in the description here. Next up, this tax prep checklist. So on this slide, I'm just going to read straight through the checklist. So these are the things that you want to prepare and gather. You want to get last year's tax returns. If you are filing via the same CPA this year, they're going to have that for you. You're also going to need personal info like your social security number, date of birth, the things that you know in your mind. You need to have all of your income and expenses prepared and orderly. So if you are in accounting software, then that's going to be your profit and loss statement and your balance sheet. You want to make sure you have that, especially if you are not a sole proprietor or single member LLC and you're filing as like an S corp or partnership. You're going to want that balance sheet. If you are still in a spreadsheet tracking your finances that way, then make sure your income and expenses are very clear. You want to gather all of your tax forms that you receive either via email or sometimes people send them through a portal via email, or in the mail, in the, snail mail. Make sure you have all of them, your W-2s, your K-1, if your partnership, 1099, like all of your forms that you get in. Mileage records. You want to definitely make sure that you are tracking your business miles. And you can also track mileage for medical as well. The IRS standard mileage rates for deductible vehicle use are 70 cents per mile for business, 21 cents for medical or moving, and 14 cents for charity. That's going to increase slightly for the 2026 tax year, but 70 cents per mile for business related driving, not commuting, but business related driving, that's steep, so that's a big tax deduction. So make sure you have your mileage records on hand. You are also going to want to have your assets and equipment listed out because those will depreciate. Usually that's anything that's like office equipment or like a vehicle or some sort of asset that's $2,500 or more in value. Other things that are considered assets that are lower than that, you can always just put as expenses, like office expenses, in your profit and loss statement and take the full deduction for the year. Yeah, your financial statements, I already said that. Any loan statements. So if you have business loans, like your SBA loan, anything like that, like you're going to want to have that ready, or credit card statements, because your CPA is going to want to make sure that your balance sheet closing balance matches what those statements say. And any charitable donation receipts. So everything listed here supports not only tax prep, but accurate bookkeeping and cash flow clarity all year long. So this is not extra work. This is the work. And you may have waited until now to get it all together. So that's why taking care of all of this throughout the year is super important, so that you are not in a time crunch feeling super stressed out, because your people need you to not be stressed out. They need you there, clear-headed, present, serving them and doing your thing without 1,000 other things on your mind about what you need to get done quickly. Okay, so let's talk entity structure planning for 2026. So as you move forward from the 2025 tax year and plan for 2026, entity structure becomes very important. So if you're currently a sole proprietor, you might benefit from incorporating for liability protection or potential tax savings. And some business owners may want to explore electing S Corp status to help reduce self-employment taxes. But I want to be very clear about this, because I see a lot of these bookkeeping companies telling everyone that they need to go S Corp and they're going to save money. That is not true. There's a time when you do that. And it all depends on your profit margin, and your net income. The tax prep to go S Corp is higher. The fee is higher. And you also have to pay yourself employee wages, which include employee taxes. And so sometimes it's going to make sense. Like if it's going to save you money on the self-employment taxes, great. Sometimes your business isn't quite making enough yet for it to be worth it. You end up spending more. Don't fall for some random ad that you see on social media telling you need to go S Corp status and that you're missing out on all these tax savings, because there is a time for you to do that, and it may not be right now. So please, please, please talk to your tax preparer before you elect to go to file as an S Corp. Okay. Partnerships should be reviewed if ownership, income, or long-term goals changed in 2025. And recent tax law updates have solidified long-term QBI benefits, that's qualified business income benefits, and your entity choice can impact whether you qualify. So entity elections also have early deadlines, so waiting too long can limit your options. So before making changes, please always consult your tax accountant so you understand how a new structure affects your numbers and reporting. Okay, let's talk about what CFOs focus on first. When CFOs step into a business, we usually focus on 3 areas first. First is simplifying accounts and categories so that financial reports are clear, easy to read, and actually useful. Second, we focus on creating consistent monthly workflows for reconciliations and reporting so that nothing gets missed. And third, we focus on building processes that protect financial data, control access, and reduce risk. So getting these three right creates clarity and saves time and builds a strong foundation for growth. So these are the things that we put in place for our clients. And now I want to walk you through how to think this way too, in case you aren't ready for a CFO. So one thing your accountant wishes you'd done first, and not just at tax time, is create a chart of accounts that is tax ready. Here's what that means. You want clear income and cost of goods sold accounts at the top of your chart. Expenses should line up with common tax deductions to simplify filing. Those go underneath that. And then owner, payroll, and tax-related accounts should be separated so nothing gets mixed or misreported. Some of those tax-related accounts, you need to put those as liabilities, which goes on your balance sheet. And then avoid, on the expense side, avoid overusing the miscellaneous account, because catch-all categories like that make it harder to track deductions accurately, which means that your CPA is spending more time, which means that you're spending more money. And not only that, and probably more importantly, if you're looking at this throughout the year, is that if you're using that miscellaneous account too much, then you're not getting a very clear picture of what your business's story by the numbers is trying to tell you. So really try to avoid overusing that miscellaneous account. So your chart of accounts should evolve as your business grows. And I'll tell you exactly what we do here at Clone Consulting. When we first bring a client on, we talk with them about all the kinds of profit or revenue and expenses and liabilities that they have. And we create a chart of accounts as kind of a guide within Google Sheets. So we have a code, we have the name of the account, and then we have like a little description of what it's for next to that. And I will tell you that I don't think I have a single client on our roster whose chart of accounts doesn't change throughout the year, because something is going to get removed or something is going to get added, or the business evolves in some way and the chart of accounts has to change with it. And so we keep that up to date in Google Sheets, and then we update it in the accounting software as well. And that's a really quick way too for your tax accountant to know what kinds of revenue streams and like general transactions that are running through the business. You could always send them that chart of accounts so that they can have like a quick look at everything, because your chart of accounts really is the foundation of your financial situation in your business. So a tax ready chart of accounts, it keeps reports clear, it keeps tax prep smooth, and it keeps communication with your accountant easier. So let's talk about opening balances now. So at the start of each year, there are a few things that you should always check in your accounting software. You want to check, I mentioned this a second ago, but your bank and credit card balances should match your actual statement. So if you're looking at December 31, you want to make sure, or January 1 even, like you want to make sure that what your bank statement or loan statement or credit card statement says matches what is in the books. Another thing, you want to make sure that all of your outstanding invoices and bills carried over correctly from the previous year to now. You want to, again, look at the loan and credit balances. I already said that. You want to look at your owner and equity balances. Those should reflect last year's activity. And you want to make sure that on January 1, you are closing your owner's equity to retained earnings so that it doesn't look like you've made a ton of money in owner's draw this year. I brought on a client a couple years ago, and I knew from the get-go that we were not going to be able to migrate her QuickBooks account directly into Xero, because I knew that there were going to be a lot of mistakes. And a lot of times it's easier to just start over fresh, because what I was looking at was like $500,000 in owner's draw for that year. And she hadn't even brought in that much revenue for the year yet. And this was like in, I don't know, May or June. And so I knew that the equity was not being closed out to retained earnings. So I knew her retained earnings was probably off. And I did not want to go back like for the entire length of her business being open to look and find where those mistakes were being made, because I don't think it was happening ever. So make sure in January 1, you are closing equity to retained earnings. So yeah, review this early if you're unsure. Okay, let's talk about monthly bookkeeping habits. So we just talked about your starting balances. If those are off, it's often because good bookkeeping habits aren't in place. So you want to build those into your monthly routine. So block 1 to 2 hours each month as a non-negotiable finance check-in. You want to make sure that you separate personal and business finances completely. You want, really, I suggest getting out. I mean, it's, spreadsheets are great when you're first starting out, but it's so much easier to get yourself into accounting software like Xero or QuickBooks. We prefer Xero. We only support Xero. So like when our clients come in, we actually migrate them from QuickBooks, which is usually where they are, into Xero. You want to be saving receipts, invoices, and statements as you go. These are easily uploaded via HubDoc into Xero. So you don't even have to have a huge stack of receipts sitting around. It can all be digital. You snap a picture and then you like send it, like you can send it via email and it goes straight into your HubDoc account. So you want to fix small issues early before they snowball. And you also want to know when to ask for help instead of trying to figure out everything alone, because again, your clients need you working in your zone of genius. So if you're trying to do this and it's just taking you forever, ask for help. It's one of the best lessons you can learn as a business owner, is know when it's time to ask for help, and also know when you, like, it's okay to admit when you don't know the answer to something, you know? Okay, so bookkeeping is a schedule. It's not a scramble. If I haven't drilled that in, I'm going to do so now. Because if bookkeeping feels overwhelming, it usually just means that everything is being done at once. So most business owners think that bookkeeping is something that you catch up on later, but in reality, it works best when tasks are done on a schedule. So the goal is not to do more, it's to do the right tasks at the right time. So if you want clearer numbers and fewer surprises, you need to track every dollar and use that data intentionally. So get your phone ready to take a screenshot, because the next slide is a checklist. Okay, so this is a bookkeeping task breakdown. So weekly, you're going to be wanting to upload and organize receipts before they get lost or before you forget what they're for. You want to be monitoring your cash balances. You want to review bank activity for errors or duplicates. And you want to stay on top of deadlines by tracking tax, payroll, and filing dates, if that applies to you. On a monthly basis, you want to record your income and expenses. You want to reconcile bank and credit cards. It is so important to reconcile. That is our final check to make sure we have things right on a monthly basis. We have a 7-phase process that we do here every month for all of our clients, and reconciling all of the accounts is phase 4. And that tells us that we captured everything, and that accounts that are tying together, like your payment processors with your checking account and things like that, that all of those transfer accounts are matching up. So definitely make sure you're reconciling. If you're not reconciling and catching problems when they come up, then it is truly a case of accounting forensics to go back and find where the issue is. And that is time consuming. So do this on a monthly basis. You also want to be sending your invoices and paying your bills on a monthly basis. And you want to review cash flow so that you know what's coming in and going out. And I like to tell my clients too, like especially those that have credit cards or loans, like if you review your cash flow on a monthly basis and you see that you're positive, then I would go ahead and make an extra payment on that credit card or loan. Choose the one that has the highest interest, because that's going to save you money down the line. Okay. On a quarterly basis, you want to take a deep dive into your profit and loss. And the reason that, I mean, you want to look at this on a monthly basis, obviously, but the reason that you want to do it quarterly is because you don't want to just be looking at the monthly numbers. You want to be looking at patterns over time. And so quarterly is a really good opportunity to see if like a revenue stream is increasing or decreasing? Like, is it performing better? And therefore you should really focus your attention on that, or is it going down and maybe you need to either improve upon that particular revenue stream, or you need to focus on another one that seems to be performing better. So that's, you just want to be looking for consistencies, inconsistencies, and patterns. And that's why I suggest doing that on a quarterly basis, like a deep dive, like set like your own CFO quarterly check-in. You want to review your balance sheet in detail. Again, this is about consistencies, inconsistencies, and the patterns. Like, is your debt coming down, for instance? You want to be setting aside funds for estimated taxes. Now, I have this on the quarterly here, but if you were doing this yourself, honestly, I would be doing this on a monthly basis. We suggest to all of our clients to be putting 25% of their net income if you have to pay quarterly taxes. If you're filing as S corp, you don't have to do this because you're on employee salary. But if you are a sole proprietor or single member LLC and you're somebody that is required to file quarterly estimated tax, then you should be putting this aside every month. 25% of the net income, put it aside every month in a high yield savings account. And then you want to be reviewing contractor payments and sales tax filings as well. And then annually, you'll be preparing your books for tax filing, review the full year of financials. This is going to help you this will help you make your plan for the following year. You're going to be issuing 1099s by January 31 when required. Oh, and I didn't mention this before, but because January 31 falls on a weekend, like today's Saturday, today is January 31, it's Saturday. These are actually not due until Monday the 2nd. So the IRS will give you that like weekend off and then say, okay, but Monday they're due. So yeah, go ahead and issue your 1099s where required and plan financially for the year ahead. Build a budget and a forecast for the upcoming year. I do like to plan in 90-day segments because I find it very hard to plan for the year. Like, I think an overall general plan for the year is great, but a detailed plan, you're going to do really well to break that down into 90-day segments. Otherwise, you risk the chance of becoming super overwhelmed early on, and you don't want to do that. So yeah, so this breakdown gives you some structure. So take a screenshot, print it out, hang it up by your desk so that you don't forget what you should be doing on a weekly, monthly, quarterly, or annual basis. Because with this breakdown and with the structure creates clarity, and clarity reduces stress, and that's what we want. So let's talk quickly about forecasting and spreadsheets versus software. So when it comes to forecasting, most business owners choose between spreadsheets and forecasting software. So spreadsheets are familiar, they're customizable, and they're either low cost or completely free. And so these work well for early stage businesses, but they do require manual upkeep. I am a personal fan of the spreadsheet because I like that control, and I don't like having to drill down and find out it, like make sure that the AI in the forecasting software has like gotten it right. So, but forecasting software is good. It's like less manual labor, right? So forecasting software, it does update automatically using your accounting data. Now, this is to say that your accounting data is correct. Are your books up to date and correct? Because if you're using forecasting software that's based on your accounting data that's incorrect, then it's not doing you any good. But if your books are correct, then the forecasting software, it does reduce errors and it makes it better for growing businesses because you're going to have less and less time to do the manual labor as you grow. So most businesses do start with spreadsheets, and many eventually use both. But what matters most here is visibility and correct visibility. Okay. All right. So if you don't have a CFO, then you are the CFO of your business. So CFOs don't just look at profit. As I mentioned before, they watch patterns, consistency, and whether the numbers make sense. So common red flags to look for include cash flow feeling tight despite sales, increasing expenses without clear reasons, thinning margins, that's your profit margin, And in accounting software, you can typically, well, in Zero, I can't remember if you can do this in QuickBooks because I really don't work in it that much anymore. But in Zero, you can add a profit percentage at the bottom so you can see like what your profit margin is at the end of every single month on your P&L. So look for thinning margins and lack of forecasting. So these are all signals, not failures. They're just signs that something needs attention. Okay. Now, again, some people are like, yeah, I've got the books done for tax purposes, but that's not the only reason you get your bookkeeping done in a timely manner. Your financial reports are not just for tax time. So you want to use your profit and loss to see what's actually working. You want to check cash flow before making decisions like hiring or investing. That all takes planning. You want to look at trends over time, not just 1 month. So I also did a full video on cash flow last week called Why Cash Flow Feels So Stressful and How to Create Clarity Instead. So go watch that one if you're not even sure what cash flow is or how to work it or read it. Okay. So in closing, if you would like help with any or all of this, we do have solutions that meet you where you are. So we can do done for you monthly bookkeeping, or we can do financial foundations for DIY CEOs if you are wanting to do it yourself. So financial foundations is something that I offer one-on-one right now, and it's soon going to be an online course as well. This is where I take you through from the start to the finish and teach you exactly how to do your books and then how to be the CFO and read the numbers and translate those into a language that you understand. And then the done for you monthly bookkeeping, everyone's on a subscription package. We have 4 tiers. And you can go to our website and schedule a discovery call, a free consultation, so that we can see if we're a good fit, if we align. And also, it would give me a good opportunity to learn about your business and what your financial needs are so that I'm able to give you an accurate quote. So yeah, so to close out this first Money Matters class, I am going to pull you that Business by Design card that I promised, just for a little inspiration and celebration for making it through. And hopefully you can take this with you after learning all about your financial foundations and how to be the CFO in your business. So, yay, Business by Design. They're so good. Okay. Ha! Success. Okay. What people think success looks like, this straight line, and then what it really looks like, the squiggly line. Success is anything but linear or straightforward. That is so true. However, one thing that's going to help you be successful is to learn how to do this or to get someone to do it for you. So with that, I will let you go. Thank you so much for being here. And I look forward to coming to you with a brand new topic next week. Thank you. Bye.